Okay, and welcome back, students who are taking financial accounting, and we're working on the theory videos for Chapter 2, Analyzing and Recording Business Transactions, and this is the 5th video in this series. And in the last video, we had been discussing how to make journal entries. Now, get down there, here we go, how to make journal entries. And just as a quick recap, you know, it's, for the most part, you can look at previous transactions to see how to make a journal entry. But the problem with that thinking is that, when you come across a transaction you never did before, how are you going to make that journal entry? Well, even the most simplistic journal entry has a process that you kind of like develop and go through for yourself in order to be able to make the journal entry. I presented this here method that I use by asking myself the question, does this transaction affect cash? And the reason why I do that is because we use cash the most, that general ledger account. So I ask that question first, and if I understand that, I debit cash if my cash increases because it's an asset, right? And that means I'm going to, the opposite side of that is a credit if the cash decreases. Okay, and then I can back into the other half of the journal entry, right? And that's just a matter of asking myself what category of account does this transaction refer to, and then looking at the accounts in that, the general ledger accounts in that category, and choosing the most appropriate one. The second, if my answer to that first question is no, am I affecting cash? If my answer to that question is no, then I ask myself the second question, does it affect accounts receivable or accounts payable? If I'm affecting receivables, well, that's in essence basically the same. I'm going to do the same thing as I did with cash. But if I'm looking at an accounts payable, well, then, I'm just doing the opposite because receivables and payables are the opposite sides of the same coin. Now, if I answer that question and it's no, well, then I'm going to look for an account that makes the most amount of sense to me. If it's an asset account, whether it's receivables, whether it's computers, furniture, building, land, whatever, they're all assets. I'm going to treat them the same way as cash. Okay, so it's not like I have to memorize something new for each and every particular situation, right? And then I can just back into the other half of the journal entry. And that's just the way I go about making journal entries and the way I think about them. There's a 5-step process in the book that you can follow. Okay, feel free to follow that. You can search for YouTube videos and see how somebody else does that. It's a thought process, and a lot of people will, just kind of like mimic out of the book. But again, I warn you that if you do that, you're going to get yourself in trouble, because even if this transaction might be similar to something in the book, but there will be a slight difference to it. And if there's a slight difference to it, it might require a different a different look to the transaction, different accounts. And if you're copying out of the book, you're going to get it wrong because you didn't take into consideration that slight difference. So, with that said, here's an illustrative transaction, from the textbook, and it says Osborne Consulting sold $10,000 of common stock to Cindy Osborne, who was investing cash in the business. Okay, so when we make a journal entry, okay, so this is a transaction, okay, and you have to make when you have a transaction, you have to put it in a journal. When you put it in the journal, these are this is what a journal entry should look like. It should have a date. Then the accounts are a description and or the general ledger accounts themselves. You have a posting reference column, and then you have a debit and a credit column. And remember, debits must equal your credits. Okay, so if I was going through my thought process when I'm making this journal entry, now before I jump before I jump there, realize that in a journal, you don't just have one line item like this. I mean, what you have is a whole page, okay? And you're going to make your one journal entry here with the amounts here. You'll make another journal entry here, okay, with the amounts here. Make another, and you're just going to keep going down the page, okay, until you get down to the end of the page, and that page is going to be numbered 1, and then you're going to have a, move on to the next page, okay, and that's going to be number 2, and you're just going to still have making journal entries, and you're just going to keep going down the page, okay. That's what your journal is going to look like, and you just one page after the next after the next. Now, when you're putting them on the page, yes, they should look in this format, and yes, you're most likely going to have these columns with date, accounts, posting reference, debit and credit in the columns, right? And then you're just going to fill out the information. So here, the date is January 1st, 2014. So in my journal, I mean, remember, this is the transaction, right? So in my journal, I'm going to put the date. Okay? Then I'm going to make the journal entry. And remember, I asked the question, am I affecting cash? Well, Osborne Consulting Inc. is selling 10,000 shares of common stock to Cindy Osborne, who is investing cash in the business. So Osborne Consulting, they're going to get cash, all right? Since they're going to receive cash, and cash is an asset, that's the category of account, the normal balance of an asset, remember this plus means the normal balance, doesn't mean increase or decrease, okay? The normal balance of an asset is a debit, okay? Since my cash is, is going from some predetermined amount and it's increasing by 20,000, okay? Well, if I increase the assets on the debit side, that means I'm going to debit my cash. So I write cash first, and I'm sorry, it goes flush left. When you're making journal entries, debits come first, then credits come second. Okay, I see students who will write the credit first and then the debit second. Even though technically it's still correct, it's not the preferred manner. Okay, because why? You're going to have one entry. If you're working with a lot of entries, you want them to be in all the same format, so you don't have to be thinking about whether it's a debit or credit. All of the debits should be listed first, then the credit should be second. So as I go down the page, I have debit, credit, debit, credit, debit, credit, all right, debit, credit. And because of this formatting convention, if I happen to have to be looking at this entry, I shouldn't have to be thinking whether my debit was first or my credit was first. I should just know that my debits equal credit. My debits are first and credits are second. Okay, so put the debits first. Also, and since I have and I'm making that flush left. Okay, so I have my cash and I'm making it flush left, and I put the 10,000 in the debit column. Now, because my debits equal credits, okay, that means I have to credit something else, so I put it in the credit column. And now I have to find the account. Well, I'm selling common stock, who was investing in the business. All right, so what's the category of accounts that I should be looking at? It's not an asset, because assets is something we own. Okay, it's not a liability, it's something we owe. Equity. Okay, stockholders' equity is an investment in the business, and it should have an account called common stock. Okay, so when I look underneath the stockholders' equity and see that account common stock, that's where it would go. So I know I have to credit common stock. Now here's another thing that needs to be pointed out. Notice that the credit here is indented. Okay, it shouldn't be flush left. It should be indented. Right? Your debits are always flush left, but your credits are indented. All right, that's the proper way of making the journal entry. And then, of course, you wrote your credit for $10,000 over here in the credit column. Then you put the description and you write this out. You put a description of what the transaction is about. In this case, it says sold stock. Now, for the most part, if let's say I don't know, let's say you're paying rent, okay? Your description would be, I could put paid, January's rent, okay? And I could write that in the description. But because I'd have, my entry would be a debit to rent expense, right? Just looking at that entry, I know, that I'm paying my rent. So probably I wouldn't make a write out a description as to what I'm doing, okay? But you do want to write out, and this is important for anybody who's going to take intermediate accounting, okay? Um, you do want to write out that description and put in as much detailed information as necessary. And if that means that you write a whole paragraph within this description box, then you write a whole paragraph. And like I said, that'll become important to people who are taking intermediate accounting, because you're creating the financial statements, and you are making these here journal entries, and you need to be able to go back and see how you calculated something, okay, or the reasons why you put it to a specific account, for things like this. That all goes in the description to kind of like justify how you made that particular journal entry. But the most simplistic journal entries, like I say, paying rent, paying an advertising expense, making a sale, well, it depends upon the sale. If you're selling something special, you might want to put in the description what you sold, okay? But for the most simplistic journal entries, the simplistic transactions, you really don't need to put in a description, okay? All right, so um, that's how you make the journal entry, okay? But from there, once we have this, um, once we have all of our journal entries, right? And this is what the page looks like. Okay, remember your listing of your journal entries. Remember, see there's a page number. Okay, a general journal can be GJE page 1. All right, and you'll see why this is important. Or just J1 journal. If this was, say, a cash receipt journal, I might label it, my reference would be CR1, or like a cash disbursement journal, CD1, or a payroll journal, PR1, okay, or a sales journal, S1, right? The page number, you abbreviate the journal and then you put the page, okay? The reason why I'm pointing that out right now is because what you have here is, your journal entries, and they're all listed on one page, okay? That information, if you have 100 pages, it's going to be difficult for you to find all the transactions that apply to cash. I mean, over 100 pages, let's say you have 60 transactions. Well, you don't want to be leafing through 60 pages, 100 pages looking for those 60 transactions and doing all of the math to figure out what your cash balance is. So what you do is you have all of these pages, okay, with your journal entries, and you post them to your general ledger accounts. Okay, that's these two. Here's my general ledger, and I have an account called cash, and I have an account called common stock. You're going to have a ledger for each and every account. And when you post from the journals to the ledger accounts, all you're doing is rearranging the information. So you're combining like transactions together. And that's what this is illustrating, okay? When I'm going to take this journal entry and pose it to my ledger account, I take the date and I write it in the date column. Now notice how the ledger works, okay? It has the name of the account, it has the account number, there's an item column if you have to use the item column, there's a posting reference column, and I didn't go over the posting reference column up here in the journal just yet for a reason, just like I'm going to skip past this posting reference at this moment in time. But then there's the debit column and a credit column. And now, again, there's different ways, different forms that you can use. Some forms will not have a balance, and this won't have this balance section, okay? They'll just have the debit and credit column. right? And what that will mean is that all of the debits and the credits will be listed down the form, and whenever you want to know what the balance is, you'll actually have to do the math in order to arrive at the balance. Okay. A lot of other forms, like in this case here, it has a balance column that also has a debit and credit. And what you're doing here is you are keeping a running balance in this balance column. Okay. So what does this mean? Well, in this case here, we're going to post this journal entry to cash. Okay. It's $10,000. Okay. So, and we know it's a debit, so it has to go in the debit column. That's why we wrote it right here. Okay. Now, when we write it here, we want to know what the balance in the account is, right? And remember, this is a running balance. Previously, the balance was 0. So when we have a debit of 10,000, that means we're increasing the balance. So we have we'll show the balance of $10,000 on the debit side right here. Okay. Let me erase some of this to make it a little bit clearer. Okay. But now let's say we have a second entry. Now notice I only posted 1/2 of this entry just now to cash. Okay. And I'm going to not talk about the common stock right at this exact moment in time because I want to illustrate this idea of the balance, because some students get this wrong. So let's say I have 3 journal entries, okay? And all 3 journal entries affect cash, 1, 2, and 3. Okay. Well, let's say the second journal entry, and I don't care what the date is, right? And let's say it's also for a debit for 5,000. So I'll put the 5,000 under the debit column when they post it. And what they do over here in the balance is they write 5,000. Okay. Well, that's wrong. Remember, this is a balance. Okay. So what that means is if I have the balance in my account, previous to that transaction is 10,000. So now if I'm going to add 5,000 more, my debit column becomes 15,000. Okay. And like I said, some students will get that wrong just by transferring that number over into the balance. It's like you're writing the same number twice. For what reason? Okay. So now let's say we have a third transaction, and let's say that third transaction is a credit for $6,000. In other words, you write a check for, say, $6,000. Okay. So that third transaction is listed here, and it's a credit. When we post it, it's posted here as 6,000. But when we come over to the balance, we don't write 6,000 into the credit column. No, what we're going to write is 9,000 in the debit column. Why? Because I had a debit of 15,000 previously, and a credit means I'm going to decrease it. Well, I'm decreasing that amount by 6,000, so I still have a debit balance of 9,000 in that account. So that's what I mean by a running balance. Okay, you're always going to keep, this balance column is going to keep a running balance going down the page. Okay. Now, let's post the other, we posted 1/2 of this journal entry to cash. Okay. Well, we have 2 sides. We have the credit side, the common stock. So we have to come over to our common stock ledger account. Again, we put in the date. And since now this here is a credit for 10,000, okay, we have to write the credit in the credit column for 10,000 under common stock. So remember, in the journal entry, our debit equaled our credit right here, okay? In our journal entry, our debit equaled our credit, okay? Like I said, when we post to our ledger accounts, all we're doing is rearranging the information. So I take the debit and I write it in the debit column to one of the ledger accounts. And I have to take the credit of 10,000 and write it in the credit column of one of the ledger accounts. If I add up both of these accounts, I still have that debit for 10,000 and the credit for 10,000. Okay, so when you're posting, you're just rearranging the information. You just have to make sure you're putting it in the right column and for the right amount. And you have to make sure that you're posting both halves of that entry, right? Some students will post only one half to the cash and they forget about the common stock. Okay, well, if you forget about the common stock, well, and you're looking at your ledger accounts, if you were looking at your ledger accounts and you don't make this entry right here, then all you're going, when you're looking at this common stock account, this balance here, if it's not written in, the balance is 0. But you have a debit of 10,000 in your cash account. Well, that does not equal. Okay, so when you make that journal entry, make sure that you're posting both halves of the journal entry, right? The debit to one account and the credit to the other account. And again, when you write it into the ledger account, you adjust the balance. Notice with a common stock, since my balance was 0 before, and I know that the normal balance of my equity is a credit, right? I have a 0 in the credit column, and when I increase my common stock by 10,000, well, that's going to be a credit. So a credit of 0 and a credit of 10,000 gives me a credit of 10,000 as my balance. And I keep that running balance in each and every single ledger account. Okay. Now, I had said I skipped over the posting reference. All right. When you're working with your journal entries, you have a page full of these journal entries, right? In several pages probably, okay? This was just one entry on that page. There could be 10 entries on that page, okay? Well, when we go and when we decide to post, and that's why this is called a posting reference, okay? We have to, I shouldn't have erased that. That's okay. When I actually write the $10,000 on the debit side, okay, into my ledger account, as a posting reference, I want to label the journal that it came from and the page. Okay, in this case here, it's journal and page 1. Okay, if it was a cash disbursements journal, it would be CD page 1. If it was page 33, it would be CD 33. Okay, and the reason why we're putting that there is because, one, this allows us to look in the ledger and say, okay, if I have a question about this entry, I go to, the cash disbursement journal, page 33, or I go to journal, the general journal, page 1, and I can see that transaction. But notice it's a two-way street, okay? When I post this 10,000 over here to the ledger account, I have to put in the posting reference from the journal into the ledger account. And then I have to come back to the journal and write in what account number I posted it to, okay? This debit to cash is this, as you can see, is 111, right? Then when I do the common stock, okay, I'm going to write it down into the credit column of the common stock account. And as soon as I do that, where did it come from? It came from journal, page 1. And as a final thing, I come back up to the journal and, I'm posting that into the account 311, right? The reason why we do that is because this way we know what entries have been posted into the ledger accounts, okay? If I have a page that has 10 entries, okay, and for some reason I only post these first 4, okay, well, the remaining 6 haven't been posted, all right? We need some way to know. I mean, if you're doing the books, you kind of like say, well, I know which ones I post and which ones I didn't. Yeah, but what if you get sick and then you don't come to work and somebody needs to look at the work, all right? They don't know what you've done and what you haven't done, okay? So that's why you have to make the posting references. So this way, it's a convention that everybody uses and everybody understands, and therefore it allows for not making mistakes because you're using the same conventions. Everybody understands those. And of course, at the end of every accounting period, all journal entries have to be posted into the ledger accounts. So by doing this, okay, by making these posting references, you know that you're not making the same entry twice. If you didn't use the posting reference, you wouldn't be sure whether you posted those entries, and you'd have to be looking, which is inefficient. You're wasting time. Okay, when you could have just wrote the posting references in. So now you have to be looking around to see if you posted these entries or not. Now this seems kind of ridiculous when you're only looking at one entry in two ledger accounts. But remember, your books are going to have, 30, 40, 50 accounts, okay? And your journal, you're going to have hundreds of pages, okay? And, then it becomes, quite unwieldy, and you really do have it's too much to be trying to figure out what you did and what you didn't do so that you don't, double post. Okay. So even if you are doing the books, by yourself, and you're thinking, why should I make posting references? Well, you're going to come a time where, you post on one day, and then over the weekend you're going to come back, and you're not going to remember where you were at, and you're going to have to do the work all over again anyway to see that you make sure that you don't double post. Okay. So this is an illustrative transaction. Okay, and basically, what I did was, and actually I did it all on one screen, okay, but I took this transaction, right, and I said to myself, okay, am I affecting cash? Because I have a debit and a credit. Am I affecting cash, right? Yes, because she's investing cash in the business. Is my cash increasing or decreasing? Well, it's increasing, which means I have to debit that account. So I'm going to debit cash for 10,000, and I have to find the other half of the entry. All right, well, it's telling me it's common stock. So I indent and make it the common stock. Okay, and also notice that these are two different columns. All right, I don't write them one underneath each other. That's wrong. Okay, if I put this 10,000 in this column, regardless of this saying it's a credit, I wouldn't be sure if this is a debit or a credit, because the amount is listed under a debit column, but yet you're telling me it's a credit. How do I know which is which? Okay. All right, so that's my journal entry, which is what we have here. I'm showing my date. I'm showing my cash. Notice that I indent the words common stock because it's a credit. And I write the $10,000 in the debit column and the $10,000 in the credit column, right? Then I have to post it to my ledger accounts. And this gets into something that I want to talk about called T accounts, okay? Which I'm going to do in the next video because I'm already 28 minutes into this video. So, go back and watch this video again. And if you still have any questions, feel free to telephone and speak with an instructor.